Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a 1-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. And as I usually do, I've left my lines on the chart so you can see the path that the price action followed versus what I projected in the trend lines. And you can see as I zoom in here that the market pulled back exactly. It's almost eerie how perfectly the market followed my trend line there. And as you know from last week's report, I drew this role reversal line as the place at which I thought the market would bounce. And again, right to the penny, it came down to that line and it bounced up. It really doesn't get any better than that. And the reason for the bounce is because of this powerful role reversal and the gap down here filling. If you followed the market guys long enough, you'll know that gaps, once filled, will generally cause the market or price to reverse from that point and go the other way. Now, if that's the case, where does that leave us with this gap right here? Well, with this spinning top and the gap down below the market, it wouldn't surprise me one bit to see the market drop from this point. Now what I'll do is I will erase all these lines and I'll draw new ones for you so it doesn't get too overwhelming with all the crazy zigzags and angles that we have. So here's the gap once again. This is what I think the market is going to do. I think it's going to go right back to fill that gap. Now that doesn't look like much on the chart, but that would mean a drop of 300 points from this particular close in the market. Remember, the Dow Jones Industrial Average ETF, the diamonds here, represent 1/100th of the Dow. So if this drops 3 points from 177 to, let's say, 174, that's 300 points, almost 350 points. So again, I wouldn't get too aggressive with any long positions. This rally in the Dow was brought about by a couple of things. Number one, it was a knee-jerk reaction to Fed Chairman Yellen using the word patience. Isn't that amazing how one word interpreted as being a bullish indicator? All the Fed came out with was news is that they're not going to increase interest rates right away. Give it a couple of months is really what they're saying. And you have to understand why the Fed is not so aggressive in trying to raise rates, because if rates go up, guess what? The cost to carry our national debt goes up, and we're already past the point of no return. So if we can't keep up with the payments on our interest rates at these levels, what's going to happen when interest rates go higher? Of course, the debt's going to go out of control. And you see what could happen. It could happen very quickly. Look what happened in Russia when all of a sudden their economy came tanking and the ruble, their national currency, is basically collapsing to a point where the Forex traders aren't even trading it anymore. That's amazing. And don't think that can't happen in the U.S. If it does happen in the U.S., of course, there'll be global repercussions. It'll be like a domino effect. But be prepared. Don't be scared about that. Just understand that it'll eventually happen. If we can't finance the debt and it explodes, the U.S. is bankrupt, basically. And there are ways to make money. That's why I'm loading up on gold and silver. There are bearish funds that you could buy. There are leveraged bearish funds that you could buy. There is a fund that I'm looking at right now. It's the Vanguard Precious Metal Mining Fund. It's very cheap. It's around $9, but something that you could put in your long-term portfolio. So again, be prepared. Don't be scared. And you'll make a lot of money. And as we move on in these weekly market reports, I'll give you some ideas on how you can hedge your US dollar position, whether you have cash savings in your account or other assets based on the dollar. There's ways to hedge that so that you won't get hurt financially. Okay, let's look at the Russell 2000. And again, I'm leaving my lines up from last week, and you can see We again reached this resistance area. There's a gap below the market. I'll erase these lines as well because we're done with those. I just want to use them as a reference so you can see where we're moving. And there's a good chance, okay, the next resistance level for the Russell, not far from where we are right now, is right here. And there's also a gap on the Russell 2000. Gaps on the Russell 2000 have completed or filled 100% of the time, with the exception of the most recent gap here and this gap back here. All other gaps have filled. So there's a high probability the Russell 2000 will come back and do that. So I'm going to leave that line up as my forecasted short-term trend, and you can follow that. Moving on to the spiders, that's SPY, it's the S&P 500 index ETF. You'll see that again as I zoom in, the market came down that trend line exactly like I said. I thought it would go a little bit lower and test the 200 period moving average, but what it did is it filled the gap here and almost filled the gap down here, small gap down here. So with this long vertical line called the shadow, that is extremely bearish. That means that the buyers tried really hard to get it higher above this resistance. Again, I'll erase these lines for you right there. This vertical line means the buyers tried to push it up and the sellers came right down. So again, there's a good chance that the market will do this and maybe even retest this 200 period moving average, but I at least think that this gap will be filled. So far we've looked at the diamonds, we've looked at the Russell 2000, we've looked at the spiders. They all have gaps, and therefore there's a high probability that the gaps will fill. We could already see that on Friday here the volume was lower than on Thursday, so it tells us that the buyers are starting the weekend. And again, with all this news of the Fed and Russia, there is all kinds of nervousness out there, but there's also opportunity for you to profit. And we have to make sure we're mindful of that and don't let fear take over. Okay, let's look at the Qs. QQQ. It's a NASDAQ market. And you can see once again, as I zoom in, there is a gap. And lo and behold, I marked this line as a gap that I thought would be filled, and it filled on Tuesday. And that was a perfect gap fill. And again, look what happens when the gap fills, like it did here, the market reversed. Now, again, I'm going to draw my short-term trend line. I think the gap will fill right there, and I'm going to leave that on the charts as well. So finally, let's take a look at the VIX. This is the volatility index. I drew some forecasted lines there. This came back exactly the way I thought. Just the timing was a little bit sooner. That's all. I did expect the VIX to pull back and possibly bounce off of this trend line here that I have. But the VIX gapped down. Interesting, isn't it? Well, if the S&P is gapping up, and the VIX is a contrarian indicator to the S&P, then there's a very high probability that the VIX will start to move up to fill this gap, and that means a bearish turn for the S&P. So what's really great about this market is that it's following all the technical signals. So if you see a spinning top like you see here, or a doji, these two patterns of spinning tops and dojis, and you know that those are signs of indecision that usually result in a pivot point. Again, back here, look at that. Spinning top, long shadow above the market, that was a pivot point. Boom, it came back down. If you look at anything, even bullish and bearish engulfing patterns, they're very reliable, and you have the ability to read these charts with great accuracy, and not only be able to read with accuracy, but to be able to profit from the signals. Again, it doesn't get better than that. And my goal is to help you understand the signals so that you can relax with them. And when you can relax and remove that fear, what happens is you make better financial decisions. It's just common sense. It's one of the reasons why, financial advisors recommend that people do not make any big financial decisions after a death in the family. Why? That stress clouds the decision-making process, and you make bad judgment calls. And that's why technical analysis is so important, because it helps you relax and make better decisions. And it also helps you manage risk better. So if you have a clear support level and you're going to put a stop below that support, you're minimizing your risk. So that's it for the Market Guys Weekly Market Report. Have a great weekend, and we'll speak with you soon. So long.